Welcome. So in this video, we're going to be talking about my dividend investment portfolio, when I started, how I started, what are my goals for in the future, so on and so forth. So give you a little bit of background on the portfolio. My name is Reggie. I'm Reggie the investor, and I started this investment portfolio on September the 5th, 2023 of last year. I deposit $200 each and every month, $100 on the 8th, and $100 on the 23rd of each and every month. So today is March the 8th, and I made my deposit already, which brings my net worth to $1,412.29. Right before we get into all my holdings and all the numbers, of course, I want to say I do appreciate each and every one of you guys that have subscribed. If you haven't already subscribed, please think about it. Soon to be 100 subscribers. So let's go ahead and get right into what you pretty much came here for. Let's go ahead and go right into the holdings. So I hold 16 different positions, which are stocks and ETFs. 3 of those are ETFs. The rest are individual stocks. As you can see here, you can see for the first column how much in shares that I hold of each and every stock, what's my average share price for each and every stock, and how much I have invested in each and every stock. So if you're curious on any of this information, you can also see what I'm red and green on. Pause the video here, take a look. If you got any critiques or comments that you want to make about the portfolio, something that you agree or disagree with, put it in the comments below. I do not mind criticism, but other than that, I do appreciate you being here. So if you're curious on the numbers, on the percentage-wise, on how the portfolio is doing, so I started, like I said, in September the 5th, 2023, and since starting then, my portfolio is currently in the green by 21.39%. So far, year to date for the portfolio, so the year 2024, we're currently in the green by 4.19%. Comparing that to the S&P 500, if we go here to year to date, we're kind of falling short, or we are falling short a few points. S&P 500 is up 8% pretty much, and we're pretty much half of that for the year. It hasn't been a full 3 months just yet, so we're going to go with a 1 month chart. So in the last month, the portfolio is in the green by 1.63%. If we go here in the last month for the S&P 500, it's currently up 1.93%. And then for today, since it is Friday, the market did close today. S&P 500 is currently in the red by 0.65%, and for the portfolio as well, we're currently in the red by 0.38%. So we pretty much outperformed today, the S&P 500. If you want updates like this on a day-to-day basis, I do post shorts, so make sure you do subscribe. I post daily shorts Monday through Friday of how the portfolio is doing percentage-wise and if I make any changes to the portfolio. But other than that, also if you're curious on any activity that I have done in the last month, so on and so forth, any dividends that I have earned. No earned dividends this month for the month of March, but we did do some buy orders this month. We bought 8 different holdings. As you can see here, the amounts that we bought at, the amount we put in each ETF and stock, so on and so forth. These are also some more trades that I did make on the 5th of this month, and not too many so far. Nothing new at the moment. Possibly we'll have some more trades over the weekend. I'll invest a little bit more money into some of the holdings because some of them are currently flat instead of being on the red. Let me go back here. So yeah, I may invest a little bit more money into the portfolio this weekend. When the market open, it'll be executed the Monday morning. But other than that, if you did make it this far into the video, I do appreciate you. One more thing before you leave, if you're curious on how much I've earned in dividends since starting, I've earned a total of $7.98 in earned dividends. So I know that's pretty much all the information a lot of people are attracted to. I'm glad I got it out the way for you guys. So if you did make it this far, I do appreciate your time. But the video still continues on, okay? So in my previous video, we were talking about adding a new stock or replacing one stock with a new stock in the portfolio. So in my industrial slice of my portfolio, I have 4 different holdings in this one slice: Lockheed Martin, 3M, Waste Management, and Caterpillar. Right now, I am thinking about swapping out 3M for a company called Fastenal. Hopefully I pronounced that correctly. It's been on my watch list for a little while. I never really took the time to take a look in depth into it, see what the business is about, so on and so forth. So if you got any articles that you guys know of or any insight on the company, feel free to put it in the comments below, or even any criticism that I need to know about before even investing, put it in the comments below. Right now, the reason I mainly haven't invested yet is currently at an all-time high at $75.63. So I'm just waiting for that to come down. Free cash flow yield is kind of high for this stock right now, 2.91% with a forward PE ratio of 34.6%, or not percent, but 34 points, I guess you can call it. But not a bad company. Just looking at the numbers, they are buying down debt. They do pay a decent and a consistent dividend. Sometimes they do have spikes in free cash flow, but overall has been pretty much consistent. Only thing that I kind of need to do research. Oh, okay, actually it was fixed. So stock-based comp previously was glitching out on this one stock before, but it seems like it's been fixed now. Stock-based comp is not as high as it was before, but overall, EPS, earnings per share, has been growing consistently. 7% every in the last year, so on and so forth. The growth has been consistent. Dividends have been consistently growing. I do not know if this consider a dividend aristocrat. I think it is. I will have to double check and be sure. They don't do really much share buybacks, but they do them, which is another plus for another. Pretty much all my holdings do are buybacks, and as long as they're active in buybacks and not diluting the shareholder, I don't mind that at all. And other than that, the stock does look very great. It's up 19% up for the year. So this is one reason I do have my eyes on it as well, and I do think it's a pretty decent business, right? So I haven't pulled the trigger on this one just yet. Still doing some more research. Still reading a couple more articles. Looking at their previous what do you call these earnings? Earning seasons. I forgot what you call them. When they release their earnings, I have looked at some previous ones. See how investors have reacted to either bad earnings, good earnings, so on and so forth. Right. So this is a company that I may be swapping out for 3M. 3M is just it hasn't been doing too well since I invested into it. 3M has been here since the start. I know since the CFO stepped down, the $7 or $8 billion lawsuit that they have with the earplugs, and then the earnings that they did report for this year wasn't pretty much to investors' liking. So it went from a stock price of 10 something to now $93, and my average share price for this stock is $96. So I held off on investing into this stock. Really want a good buying opportunity for the Fastenal stock, ticker FAST. I'm gonna just say that the FAST stock, right? I just been waiting for a buying opportunity. Really, I may, if I do pull the trigger on this one, I may just go ahead and invest in it at the current share price, whenever, or whatever the share price is at the time, and just dollar cost average down, because I do think this is a pretty decent growth stock, a decent compounder, of course. I just want to make sure before I invest into it, I am 100% confident that at the moment, or my thesis on it is something that I look for in the long term in the future, right? Because the goal is to live off of these dividends and not really worry about this stock crashing whenever, so on, things like that, right? Things that we all investors want to steer away from. Okay, so speaking of other stocks, Costco did release earnings today. Their earnings weren't pretty much what investors were kind of looking for. The main reason I think they went down pretty bad is because of the valuation that Costco is currently at. Costco is at a very high valuation for a retailer. So if we go here, I think the PE ratio, PE ratio is at a 50x. Free cash flow yield right now is at 2.73%. I haven't invested in Costco in a little while due to it just consistently growing and growing very fast. It is up right now 11% for the year, but today the market did close off at it with in the red by 7%. So that doesn't fear me at all. That just hopefully sooner or later I can get a better buying opportunity, or the intrinsic value just makes sense to invest. Right now I think it's just very expensive to invest in Costco at the moment, so I'm not planning on buying it anytime soon. If we do go back to M1 Finance, I think my average share price for Costco is like in the 500s, 551. Currently, I think the next buying price I'll probably consider buying Costco, depending on what the PE ratio is at the time. Anywhere from the 600, 650 range. If it is in the 600 range, of course, but if it's around 650, 670, maybe a little bit lower than that, that's kind of a price that I was kind of looking for to come down, or unless they do something that's magnificent and this price currently makes sense for Costco, right? But right now, personally, I don't think this price makes sense, or the intrinsic value of the stock right now makes sense at all to invest in. But other than that, I think that's really it about Costco. Everything else has been doing pretty well. Lockheed Martin's been practically flat. Apple is kind of going through a little bit of a spell where investors are not sure if Apple is a good stock for the next coming up years. I think Apple will be perfectly fine. They did drop the idea of making an Apple car, which some investors, pro investors, I guess you can say that, already knew that wasn't going to happen. So I did agree with him not making a car. So I'm not really upset at that at all, because we already got Tesla, Rivian, so on and so forth. I don't think Apple needs to make a car. But other than that, Apple I still think is going to be a buy for me. It's currently under the average share price that I currently hold it at. So if we go check out my average share price for Apple, which is in my tech slice of my portfolio, I don't invest in many tech stocks. Tech stocks are kind of volatile, and I don't want to really be in between that volatility too much. I only do hold 3 different tech stocks. So right now, my average share price for Apple is 178.27, and I might buy into the current price it's at now, or probably wait till it drop a little bit more. I'll make my decision over the weekend, so on and so forth. But right now, it may be a kind of a decent buying opportunity for me. Microsoft has been growing perfectly fine, investing into that every so often. Where there's somewhat of a dip into it, I haven't invested in a little bit. They've been kind of been on a roll this year, so I just been holding off and investing into it. Other than that, I think that is it for the portfolio. I'm not going to be selling anything other than 3M at the moment. And I don't mind taking a loss on 3M now. For example, if Fastenal does drop 6-7% for whatever reason, as long as it's a understandable reason, of course, and it doesn't affect my thesis on the company, of course I'll invest into it. I'll take the loss for 3M and be on my way, right? Touch on something really quickly. If you did notice, I did say I have 3 ETFs that I am invested in. Those 3 ETFs are SCHD, VOO, and SPY. Yes, I do know VOO and SPY are very contradicting. They are practically the same exact thing. Sometimes one has a higher expense ratio than another, and sometimes one performs better by point zero something every so often, right? Personally, I wouldn't say this was a mistake I made when I first started investing. I just know that there's going to be a time and a point where I say, okay, I'm going to choose this one and stick with it. But right now, I don't think there's a problem with it. They're both the same exact thing. They're both going to be doing the same exact thing. So really, it's just 2 things doing the same thing, right? I just separated the money for whatever reason, right? Yes, it is going to increase my expense ratio, which at the moment I don't mind, because I'm not dealing with a large investment portfolio to compare to others, of course. Yeah, so that's pretty much it. Other than that, the portfolio has been perfectly fine. My finance slice, haven't really invested much into that, but SP Global and MasterCard. American Express has been on a tear this year and the last few months of last year. So currently up 58% in the green on that one. So I've been holding off on investing in that one, waiting for it to come down just a little bit on the dip, and I may invest some more money into that. We already checked out consumer. I didn't say anything about Home Depot. Home Depot's been perfectly fine. Been growing as well. Investing in that one every so often where I see a dip or where I feel like it's okay for me to go ahead and dollar cost average up just slightly. Like I said, my tech stocks, we already reviewed over those. And the only real estate stock that I currently hold, which is Vici. This one is pretty much flat for me right now. It's currently pretty much at my average share price. If I can get it to dip down just a little bit, I might invest a little bit more money into this one just to get my share count up, so I can earn more dividends. From this one holding. But other than that, that's pretty much how the portfolio has been doing for me since the previous video. Right now, I don't plan on adding anything else other than Fastenal. I know you guys saw my watch list with a couple of other stocks that I may be adding to the portfolio. Just give you a heads up, GWW is not one I'm going to be adding. Reason I added it is just to compare it to Fastenal, but that's the only reason it's there. But other than that, the rest of these, Canadian Pacific, Moody's, Netflix. I don't know if I'm going to add Tractor Supply. I'm pretty happy with the consumers or the retailers that I currently have now. So that one may not ever get added to the portfolio, but I like looking at numbers, right? And then Visa, that hopefully when that comes down to a dip, I will add that one to a portfolio. Other than that, this is pretty much what my watch list is currently. Don't Like I said, don't plan on adding anything else but Fastenal, and just make sure I'm not forgetting anything. I do appreciate each and every one of you guys' support. If you made this far into the video, I do appreciate it. Hit the like button. Got any questions? Got any critiques, criticism, whatever? Put it in the comments below. And yeah, I hope you enjoyed this video. Like I said, I do post daily shorts every day, Monday through Friday. Pretty much how the portfolio is doing, any changes that I do make, selling or buying, so on and so forth. So I will see you guys on the 23rd with another long form video. It's probably gonna be the 23rd or the 24th, whichever day it is. So yeah, I'll see you guys then. Like, subscribe, and I hope you all enjoy. Peace out.